This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, June 3rd, 2015. So the euro has put in an impressive rally out from those recent lows at 108.19, although the broader structure continues to favor the downside with a lower top sought out ahead of the next major downside extension below 108.19 and towards that 12-year low at 104.62 further down. At this point, really only a daily close back above the recent high that we saw on the 22nd of May, which comes in around 112.10, would compromise the immediate bearish outlook and put the pressure back on the top side. Sterling dollar. So cable has seen a nice little bounce after the market stalled out ahead of key support at 150.89, though the downside pressure remains intact and any rallies are expected to be well capped ahead of 155 in favor of a bearish resumption. Really only a close back above 155 would compromise the current immediate bearish outlook. Dollar yen. So with dollar yen, although the broader structure now continues to favor additional upside, we have seen the market stall out above 125 to allow for technical studies to unwind from daily overbought readings. At this point, a bearish outside day formation on Tuesday could set the stage for some corrective pullbacks over the coming sessions, though any setback should be very well supported by previous resistance now turned support at 122. Euro Swiss. So Euro Swiss has done a good job of rallying out from recent lows at 102.35 in April, and the market looks like it's putting in a recovery structure with a break back above 105.25 to confirm and open the door for a retest of the 2000 and the February peak at 108.15 further up. At this point, any setback should be very well supported ahead of 103, while only back below 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So although we've seen a nice little bounce in Aussie after the market stalled and failed to take out that key recent 2015 and multi-year low at 75.33, the downside pressure in this market remains well intact, with any rallies expected to be very well capped ahead of 80 in favor of a bearish resumption. At this point, a medium-term lower top is sought out at 81.63, and really only a break back above this level would compromise the bearish outlook for this market. Dollar CAD. So dollar CAD has seen a very nice recovery over the past several days out from what should be now a medium-term higher low at 119.20 ahead of the next major upside extension back above the 2015 and multi-year high at 28.35. At this point, any setback should be very well supported ahead of 21.50 with only a close back below to compromise the immediate bullish outlook. Kiwi dollar. So it's only natural to see a bit of a bounce in Kiwi after the market broke down to fresh multi-month lows below 71.76, although any rally should be very well capped now towards the 74 area, with deeper setbacks expected below recent lows that we saw down around 70.80 and towards the 65 area further down. SPX 500. So the S&P 500 continues to show signs of potential topping with a contraction and volatility warning of a breakout and the market rounding out a top after establishing record highs recently at 2137. At this point, a break and close back below 2100 would be required to help confirm this outlook and accelerate declines back towards critical support, which now comes in at 2040. Gold. So gold continues to be very well supported above recent lows at 1170, and the market continues to show signs of potential base off that 2014 low at 1131. At this point, we need to see a break back above recent highs at 1232 to strengthen this outlook, which would open the door for an acceleration back towards the 1300 area. Really, only a close back below 1170 would compromise the constructive outlook for gold.